Inflation isn't going anywhere anytime soon. That's the latest update from the Fed. So, how can you protect your investments? Here with a list of 7 inflation proof stocks is MarketBeat analyst Chris Markoch. Chris, let's talk a little bit about that inflation update. Not the best news for investors.
So many investors hang on every word that the Federal Reserve says, but I think what was more important at this last meeting was what Jerome Powell didn't say. He specifically took out language about the Fed making progress against inflation and instead pivoted and informed investors that inflation is being a little bit stubborn and probably likely to hang around longer than they think it would.
Yeah, it feels like this has been a story for years now, and
Right,
everyone is just waiting for it to go away, but it doesn't seem to be going away.
right.
And that's why this list is important for investors to consider. So let's get to your first stock pick of 7 stocks that are really going to help fight inflation for your portfolio.
Okay, so the first one is a pretty obvious one for most investors, and it's Walmart. This was an outstanding stock in the last year, was up 78% in the last 12 months. The dividend yield isn't that much to speak of. It's probably around 0.8%, but they've been increasing the dividend every year for 35 years. Um, the story here with Walmart is they're continuing to keep market share from their core audience, which is that lower income customer, and they're also starting to see more of the higher income customers come in to get some of the discretionary items, and that's helping to kind of offset what some of the lower income consumers aren't buying. Walmart's leaned into digital technology in a big way. Walmart Plus is putting them in the e-commerce game in a big way, and they've also made a lot of investments into automation and robotics that are going to help improve the company's bottom line going forward. So really, Walmart's just kind of a no-brainer if you want to keep your investments ahead of inflation.
Yeah, a good long-term pick for investors to consider. Your second stock pick also been around for a long time.
Yeah, it's Occidental Petroleum. So a lot of investors believe that energy prices are going to recover. Oil stocks are a little bit tricky right now because there is some belief that if we drill the way that President Trump wants to drill, that's actually going to drive the price of oil down and it may make oil stocks less attractive. But Occidental Petroleum has the backing of one Warren Buffett, and that's something that investors shouldn't ignore. In fact, if Occidental Petroleum's price were to go down, it would put it in that Buffett buy zone that I know Thomas Hughes has talked about a lot on his channel, and it would make Occidental a very interesting investment for investors.
And what makes this stock so inflation proof?
The company is providing something that a lot of people are going to need. It's oil. And even if the price of oil goes down, there's a real chance that you might see these companies, the profits go down at these companies, but the revenue should go up because they're going to benefit from more oil consumption.
All right, a solid second pick. Your third pick has had a really strong 2024.
Right. This is Eli Lilly. People know about the weight loss drug craze. These stocks are going through the roof. Eli Lilly has been no exception. It's up about 24% in the last 12 months, and that's because it's come down quite a bit since September. That was just due to the fact that some of the data coming out of their weight loss drugs hasn't been what some analysts were hoping it would be, but the market for these drugs is still incredibly large. There's no reason to believe that Lilly's going to be slowing down anytime soon. And again, here's a company that they pay a good dividend, they pay a consistent dividend, and the stock just you can't ignore over the next few years.
Yeah, even if it doesn't see the same explosive growth as it did
Exactly.
in 2024, it's still a strong company. Let's move on to your fourth stock pick.
So my fourth stock pick is Merck and Company. Ticker symbol is MRK. This is another biopharma company, but the story with Merck is different than with Lilly. So with Merck, their blockbuster drug that many investors are familiar with is Keytruda. It's approved for earlier stage cancers, and it's got tremendous global demand um, because of what it's been doing for oncology patients. But the story with Merck is they've got an extensive oncology portfolio, and it's going to grow from $10 billion in 2023 to over $20 billion by 2030. That's a lot of growth. That's a lot of new drugs coming into the market. That should be very beneficial for the company's stock price.
Yeah, no matter what inflation does, those oncology
Exactly.
pharmaceuticals are going to be essential for many, many people. The stock chart on this one, does it look pretty good too?
Right now, what's interesting about the Merck stock chart is it looks like Merck may have found a bottom. It wasn't a great stock um, in terms of stock price for the last year. It's down actually about 19% in the last 12 months. But if you look at the chart, you can see that it looks to have found support. So that means that the stock probably has found a bottom. And as long as we can start seeing some of these drug approvals happen, there's a lot of upside to this stock. And it already pays a dividend that pays out around 3.2%. And so you're already kind of beating inflation just with the dividend. And if you get the stock price growth on top of that, this is one that you really ought to be watching.
That's a great stock to watch. All right, Chris, let's move on to your fifth pick in this list.
So my fifth pick here is another one that might be a buy the dip choice, and it's Mondelez. MDLZ is the ticker symbol. Stock's been down a lot in the last 6 months. That was largely because the company made a buyout offer for Hershey, and that was rejected, and investors have kind of taken it out on the company a little bit here. Trading down at near its 52-week low, this is an intriguing opportunity. One of the reasons for that is Mondelez is actually not as sensitive to cocoa prices as Hershey is. And that's one thing that makes it very attractive for investors who are looking for a name in this consumer discretionary space. And like we just talked about with Merck, Mondelez got a dividend that's around 3.25%. That makes this a stock that's already beating inflation even without any stock price growth.
The dividend is a great argument for helping to beat inflation with your investments.
Right.
Let's move along to your sixth pick in this list of seven.
Right. So this pick is McCormick and Company, ticker symbol MKC. So McCormick has been kind of an interesting stock over the last 5 years, and it's gone up when people have started to eat at home more, and it's gone down when people are eating out more, and it's just kind of been bouncing along. It's actually up about 12% in the last year, pays a dividend at about 2.3%. The argument here is that even as inflation might stay sticky, people are still going to need the spices that the company provides, and that provides a nice little buffer for the company. Plus, they've gotten into products such as Frank's Red Hot and Cholula that are very popular with consumers. So McCormick's one of those stocks that you want to look at because of the staple items that they offer.
Stability is good, but even in
Yep.
an inflationary market with consumers, retail consumers, do you think that they're still an essential item that people will continue to buy?
I do, because again, consumers are kind of balancing out that idea of should we be eating at home, should we be eating out? And if you're eating at home, McCormick products are just they're going to be pantry staples. You need to have them.
Absolutely. All right, Chris, let's get to your seventh and final pick in this list of stocks to help beat inflation.
This is another one that kind of falls in that category of a dividend giant. It's Kimberly Clark. This is a forever stock that is held by a lot of investors. We all know their products. We're talking Huggies diapers, we're talking Kleenex tissues. You can look around your house right now and you probably have dozens of products that Kimberly Clark makes. And that's really the story here. The company has pricing power, they have an ability to manage through inflation. They're a dividend aristocrat. Their dividend pays out 3.7%. So again, the stock's been a little bit iffy over the last few years, but if you've been in the stock and you're collecting that 3.7% dividend, you're just fine. You're doing okay.
A really great point and some great picks for investors to consider in this inflationary environment. Thanks for your time today, Chris. If you're looking for some more stocks to help reduce the risk in your portfolio during this inflationary season, check out our latest free report on marketbeat.com called Reduce the Risk: How to Help Your Portfolio Manage Through Any of These Ups and Downs. You can scan the QR code or click the link in the description to get that free premium report on marketbeat.com right now. Thanks again for watching, everyone, and as always, happy investing.